Welcome to the Lend Academy podcast, episode number 251. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Lend It Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lend It Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com. Today on the show, I am delighted to welcome back Rohit Arora. He is the CEO and co-founder of Biz2Credit. Now, Biz2Credit is one of the old guard of online lending. They've been around for many, many years. This is actually the third time I've had Rohit on the show. And I wanted to get him back on because obviously small business lending is front and center these days with the PPP and the struggles of small business. Wanted to see what Biz2Credit has been up to there. He has some very interesting things to say on that. He also talks about the future of small business lending as we know it, and he thinks there's going to be a lot of changes happening there. We talk about his Biz2X product, which is sort of their banking as a service type product. We talk about the SBA and the need for the SBA to approve more fintech lenders and much more. It was a fascinating interview. I hope you enjoy the show. Welcome back to the podcast, Rohit.
Yeah, thanks for the invitation.
My pleasure. So, just for those who might not be aware of exactly what Biz2Credit does, why don't you give us just a brief description of your company?
Yeah, so Biz2Credit is a fintech lending player. We have been around now for 12 years. This is our second recession that we are seeing, very different from the first one.
Mm-hmm.
I think there has been great learnings and also, what we foresee is the world is going to change very dramatically after this crisis.
Right. Indeed, it will. So maybe let's just start with that. How have you adapted to the challenges? I can see you're not in your office at work. I know you're based in New York. So just tell us a little bit of how Biz2Credit's adapted over the last couple of months.
Yeah, so I think the biggest adjustment has been working remotely fully. We have been a digital player from our inception, but still working so remote for everyone has been a great discovery and a great learning process personally. And I think from a consumer side or from a customer side, what we have seen is a tremendous adoption of digital tools and self-service mindset, which wasn't there earlier. And we have seen that happening with our partners also, like Paychex and some of our other critical partners, where the level and amount of collaboration has increased tremendously over the last 2 to 3 months' time. And I think there is more appreciation about, doing things in a more digital and a more streamlined manner. So I think that has all been a positive. I think the negatives always has been that, in an office, you have better collaboration, you can exchange more ideas, you can do more stuff, and we were really set up for that. We got into a very good, a great place in One Penn Plaza last year, invested a lot of money in our new offices, hoping that it will help us to grow our business even faster, foster more innovation. So I think that part one is going to miss if one is not able to go back to offices soon.
Right. Yeah, understood. So let's get right into it and talk about the PPP. I mean, you're a small business lender. That's been sort of dominating the conversation here for the last couple of months. So why don't you just tell us about your experience with it and what's happening today?
Yeah, so PPP program, I think it's a very interesting program. It started so suddenly. It was not really well thought of initially. There's a lot of confusion. Over, I think, 3-4 weeks, then it got better. So initially, we were referring a lot of customers, thousands of customers to our banking partners. And then sometime in last week of April, early May, we got our own license to be a PPP lender. And then we were also one of the first fintech players to get the Fed facility also, pretty quickly after that. So what we have seen is three things, three distinct factors. One is that, especially among small business owners, how quickly they adapted to being from an offline mindset to being 100% online mindset. That was, I would say, the major discovery that even we had. People who were looking for a lot of hand holding and assistance, they very quickly morphed to become a fully digital kind of a I would say digitally very, very savvy, overnight. So that was very interesting stuff. The other thing that we always saw was that banks, how far behind they are still on the digital journeys,
Right. Right.
and we have worked with a lot of banks, and the banks had to deploy like thousands and thousands of people just to process these applications. And I think eventually they did a good job, but the whole process has been very painful. And I foresee that process gonna be pretty painful for them when the forgiveness program starts, because they're still not very ready from a digital aspect. So I think that has been a big challenge with all the banks, that have worked in this program.
Mm-hmm.
And we worked with quite a few banks, because one big challenge was that, how do you integrate into something like SBA e-trans, which sounded very
Right.
simple, but SBA e-trans in itself is an old system, and banks had no idea until we didn't become a lender ourselves. We had no access to that system or the platform. So we saw those challenges very closely, and the level of documentation and still the hoops and loops the business owners had to go through to get their initial money was pretty painful actually. I think things are streamlined. I think the challenge with PPP program has been that the way it was designed initially, everybody was expecting a quick recovery. Everybody thought that end of April or early
Right.
May the economies will reopen. That hasn't happened. So I think the recent changes are trying to address that issue. That's why the PPP program has become very slow right now compared to where it was even a month back.
Mm-hmm.
And, and I think people still need a lot of money. So when I'm talking to business owners, small businesses, I think COVID crisis has been a crisis which has hit small businesses disproportionately hard,
Right.
actually.
Yeah.
And we haven't really seen the pain because of two reasons. One is, large amount of money have come in PPP program, and even a larger amount of money has come in the unemployment program, for the workers. I think we'll start seeing the actual pain sometime in July as the economy reopens and the government money starts to dry up. I think that's where we'll see a wave of bankruptcies. We'll see a lot of pain, in the economies. So I think that's where more money is required, and even I think the government has to make changes in the PPP program so that all the money that they've allocated actually gets loaned out or is given out, because that's very important. Because right now, one thing we have to keep in mind, that's the only program in town, material program in town for small businesses,
Right.
to access to credit. There's nothing else available right now.
Mm-hmm, mm-hmm. And so then are you continuing to lend today in the PPP program, or is it pretty much dried up?
No, so we have continued lending. So one of the things that we have seen is that the larger of the small businesses got money from their banks,
Right.
but the actual small businesses actually couldn't get money from their banks. So we are still continuing the program. The program has like sort of stabilized. It's not growing, but also has not decreased. The demand has not decreased actually.
Hmm.
And my view is that once these changes what were made and passed by the Congress and gets passed by the Senate, once that happens and as the economy start reopening, I think people will need more money to
Right.
just reopen and rerun their business, because they have a lot of accumulated rent right now. They have a lot of accumulated bills and they have to pay, and they're not paying it right now because obviously they're not open. Now once that starts happening, I think the PPP money will run out pretty quickly, and actually there will be need for even more money because every other program, meaningful program in small business lending is right now shut down.
Right, right. So that brings me to my next point. My next question is: so are you doing any other lending outside the PPP?
We are doing a small, so I think unlike a lot of other players, we haven't totally shut down our traditional lending programs, but obviously, like everybody else, we have to be very cautious. We are
Right.
only lending to essential services businesses. We are only lending to businesses which are, in states which have reopened, like in New York, everything is still shut down. So lending money to a retail business in New York doesn't make any sense. So I think we have made a start. We are starting to see the investor appetite to start coming back, a
Mm-hmm.
bit. So that's a good news. I think what is gonna really happen is that over next 4 weeks are very critical, right? Because as we reopen the markets and the economy, whether the infection rate will go up or will remain same will really decide the sentiment in the market, and also whether investors will want to come back. Because the good news is that interest rates are at a historic low. A lot of
Mm-hmm.
investors are looking to invest money right now. we are getting call from very large asset managers who want to be fully ready to lend money when things come back. But at the same point of time, there's a lot of caution right now, that people don't want to jump the gun too much while
Right.
they will be ready as soon as the economy fully reopens.
Yeah, that makes sense. That makes sense. So I know that I get your emails, and you're often you're tracking approval rates, and
Yes,
that's something
yes,
that you've been doing
yes,
for many years now. So
yes.
maybe I'd be curious to get if you could share with the audience what's been happening with approval rates. I mean, obviously there's not a whole lot of lending happening beyond the PPP, but how were approval rates trending in 2020?
So non-PPP approval rates are at a historic low right now.
Right.
They're even worse than like we started our approval rate tracking in 2011, and they're worse off. And today, what has also happened, unlike in 2011 or just after the last crisis, is that even the alternative lending has dried up,
Right.
actually, more or less. So I think that's a double whammy, because not only banks are not, because banks have suspended all kind of other lending program. Even 7A right now
Hmm.
is on hold. So
Mm-hmm.
7A, we are expecting it to start coming back sometime in June, because if you see in this country, small banks, small to mid-sized banks are very active SBA 7A lenders, out there, and they got very busy in the PPP program, so they also have not done like very little lending in 7A. I'm hoping they will start coming back, because government has made the SBA 7A program a lot more attractive for borrowers as well as for banks. I don't see, except for 7A program, a lot of lending coming back till the time that the economy is reopened.
Right.
Alternative lending, I think there's a lot of hunger among investors, but a lot of the players, the large players in this space, have already stopped lending, and some of them are facing a lot of their own challenges, because they have a lot of these balance sheet risks, and they are having event of defaults right now. And I think for them, it will be very tough for them to emerge out of that, in their former avatar. I think a lot of them will be either totally shriveled, or they won't be able to restart lending anytime soon. So I think
Right.
it's interesting to see that bank lending is going to be down. Alternative lending platforms, a lot of them are suffering. And while big asset managers are now looking at this space, but I think in my view, next 2 to 3 months are going to be pretty challenging in the approval rates and the lending space for business.
Right. And so, I mean, obviously, we know that many of the non-bank lenders have been shut down now for some time, but there's some like yourself that are
Yeah.
still lending. So, you're seeing what you're seeing, like for approval rates. Are approval rates even worse for non-bank lenders than for banks right now?
Oh yeah. Oh yeah. 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 So at on a percentage level, actually, non-bank lenders are performing a lot worse than even banks today, because what has happened is, for a lot of them, their own credit facilities have been frozen, or in the
Right.
securitized market is done with, and there's a lot more caution on that side. So obviously, their approval rates are very, very low. The other thing what has also happened is that a lot of good businesses who would traditionally borrow from alternative lenders have got PPP money.
Right.
So they're not coming into the market to borrow money right now for next few months, because they have the PPP money and they want to first ensure that they spend that. So a lot of the people who will come into the market right now to borrow are the weakest of the businesses, or in the sectors which have got impacted the most, where you cannot do that kind of lending. So that's another reason why the approval rates have gone down, because prior to the crisis in last 2 3 years, a lot of good main street businesses had made a migration towards alternative lenders, and they were the ones who were actually powering a lot of this alternative lending boom.
Mhm.
And once they've got the PPP money and there is very little economic activity, so they have no reason to borrow money right now, because they have no place to invest and get the return on their money. So that's the other reason why the approval rates in the alternative lending space are a lot less than even banks today.
Right, right. Okay, that makes sense. So, you've been around in this space for longer than just about anybody in the small business lending space. So, how do you think this is going to change the small business lending landscape? Particularly, I'm talking about the non-bank lenders. How do you see it changing? In the medium to long term.
Yeah, so I see three very distinct, trends happening. One was, that I've been always been a proponent of, very good risk management, even during good times. So one stat that, we have been sharing with the market has been that the defaults on our platform have never exceeded more than 3.5%,
Mhm.
compared to our publicly traded, folks, where the default rates were in double digits. So one thing I've always said and stressed has been that, you need to be good at risk management. You need to be good at collecting money back during good times, because if you don't do that, then it will come and haunt you back during bad times.
Right.
So we have seen a rise in modifications. We have seen a rise in people wanting to reduce their payments on our platform pretty significantly, but we didn't see defaults, and there was few reasons behind that. One was obviously that a lot of these merchants or these customers, we work with them directly because we don't accept anything through brokers, not ISOs
Right.
and all.
Sure.
The second thing was that we were in constant touch with them even prior to the crisis all the time. So like I think that helps us because we have been using a lot of these tools on cash flow and even helping them with that. And I think so that's one very distinct trend, that if you don't invest in risk management, you don't invest in your back office, you don't invest in the ways how you will not just lend money, but how you will get your money back, then that trend is over now, where alternative lenders can just get a lot of capital out there and then they can just keep lending money. So I think I think that's changing dramatically. I think the second trend, which is very much focused on the first trend, and I think that has changed because alternative lending in the VC world is not hot anymore, and it has not been hot for last 3-4 years, as because of some of the performance in the public markets and other things. I think the challenge for a lot of these players in the fintech lending space has been is that they've been running businesses where the unit economics were very negative, actually, and that is coming home now. So and that is like creating a lot of this problem among a lot of players because they have run out of equity. So all the money, even if they have on their balance sheet, is just credit lines and all that, and for them to raise any more equity capital in the market right now, especially if you are a like an alternative lender, whether you're a fintech, non-fintech, it doesn't matter. It's next to impossible right now.
Right.
For next 6 months, it's not going to happen. So I think people who don't have much equity or who have been running business at a loss, are seeing a lot of trouble and pain, right now. So we are starting to see a lot of consolidation in the market. A very interesting, figure we are seeing is that, as we are going back into the market for our digital, say, originations, we are seeing cost of acquisitions have dropped by 80-85%.
Wow. 85%.
Yeah, exactly. Because there's like, people cannot even have money to, do any lending and if they can't do lending, they cannot, or they don't want to acquire any customers. So that has happened. I think the third big trend that is going to happen now is that, the fintech players and actually the banks, in my view, the partnerships are going to get strengthened. So I think I've been propagating that, that, okay, banks will go digital, and they haven't really done it, till now. I think now it's not a question of bank going digital. I think the convergence will speed up, actually.
Right. Yeah.
And that's going to happen because of, I think more than 1/3 of the branches will just shut down. I can already see that in Manhattan. Manhattan is overbanked, island out here, but I can already see a lot of branches actually shut down permanently. Banks have put notices out there that they've shut down these branches forever, actually, already. I can see that happening across the country, and I can also see that the fixed costs have to go down tremendously. I think for fintechs also it becomes very imperative that they're not the new thing in the in the marketplace. So the days when they can go and raise any kind of VC money or equity money is gone. So the consolidation is happening. Good fintechs will still be able to raise a lot of money, but I think that will be far and few. And I think that's where it will become very important for fintechs to start behaving more like banks in the financial metrics, and banks to start behaving more like fintechs in their innovation, kind
right.
of thing.
Right. And I think that banks got a wake up call with the PPP, because a lot of them were just were not really ready for it, particularly the smaller banks. And I know a lot of them partnered with others. But I want to talk. It's a perfect segue into sort of your Biz2X product, which is your banking product. Why don't you just firstly just describe exactly what that is?
Yeah. So 2 years back, what we were getting a lot of inquiries from banks and non-banks, because they were saying that, so Biz2Credit as a company, we have built our own platforms, in-house platforms over the years. We got all the global patents on it and all that stuff. So banks were coming to us, and we said, why don't we offer that as a platform and a data science play? And then we formed another entity, Biz2X, and we started offering it. So now we have clients like HSBC, Banco Popular, Customers Bank, and some other banks out here. And we thought, that could be a very good business. Obviously, last 2 years has been, not that easy, because we got good traction, but still banks have been very slow, as you know. They're not easy animals to deal with, in a way. But I think all the investments that we have now made into Biz2X platform, where we are offering it as a platform and a data play and even credit, play, all three, I think is actually very interesting now, because what that is starting to do finally is that, in the PPP program, we saw a lot of interest from banks to partner with us and use our digital technologies, and which we gave for free because we didn't want to charge anything for that. But at the same point of time, we are starting to see a lot of inquiries coming in, because banks are worried, because if the next wave of the crisis comes in, the COVID crisis, then that's going to be very bad. And even if it doesn't come in, they have realized that the customers have become digital ready, and they cannot afford to have any branches, because branches have been really ineffective during this crisis, more or less.
Right.
So they're saying, how do we go digital? And the conversations that I'm having with my banking partners and a lot of other banks in the last few weeks, now we will have to see how it translates into reality. But the conversations have been that digital is not an option for us. Digital is the only option, kind of stuff. So I think they're making right noises. Now it will all depend on how it pans out, because a lot of time banks have a habit of, let's say if this virus just vanishes in the next 2 weeks time, let's say, I think banks have a habit of just going back and reverting to the mean. But I don't think so that will happen 100%, because the customers have now got so used to it, and a lot of people are not willing to go out and go into a branch anymore. They're scared.
Right, and that's going to take some time. That's not going to change until we have a vaccine that's broadly available, which it could be a year or more. So who knows? So I feel like they're going to be forced their hand.
They'll be forced,
to really, and so they'll be. So are you expecting that? Are you going? You said you've been talking to banks. I know you've got a few banks on board, but are you expecting the next 12 months to sort of accelerate a lot of the conversations you're having?
Yeah, so I think one thing with the PPP program good has been that banks have realized the value of digital platforms.
Right.
They've also realized that how old their existing LOS systems and LMS systems are. And they have really struggled with that. I know banks, large banks, I've talked to them that they even couldn't do an SBA e-trans integration. And the reason was not, it was difficult. They said our own backend systems are so antiquated that, they don't even support APIs. So sorry, we couldn't do it.
Right.
And so they were manually typing everything into the SBA e-trans. So I think that's going to happen. I think the other thing that's going to happen in my view in US is that there's going to be tremendous amount of consolidation in the banking space will come in.
Right.
Because I think right now the government stimulus money has delayed the pain. But this pain is going to come. The wave of bankruptcies is going to come among businesses. Loan delinquencies are going to go up quite a bit, because the economy has got a real shock. And that shock has not been really transmitted. The government has really tried to block that shock for the time being. But it's going to eventually come. Now, that clearly means that there's going to be tremendous amount of consolidation in the banking space. It means that they have to invest more money in technology. They will have to deleverage their branch network pretty quickly. And that also means that, they will have to find ways and means to serve the customers in a more remote fashion, which they're not really used to doing today.
Right. I see that's one of the big trends that's really going to change. So I know you touched on it, but I just want to talk about your Accelerate SBA program that you provided for banks. I mean, maybe just describe it and how you've implemented that program so quickly.
Yeah, so one of the things we did was that, we figured out we were already working with payroll companies. So we figured out during this program that payroll data has become the most valuable piece of data actually in the PPP program. So we actually went ahead and developed full-fledged APIs with Paychecks, ADPs, and other folks, and also did a partnership with Plaid also. And then, we rolled out a cloud-based platform in the SBA Accelerate program, which we gave it for free, during this program, because we thought there's no point in charging for this, kind of a product or a service. And we said let some banks adopt it. Some banks adopted it. Some banks really liked it, but couldn't adopt it because, again, of their own challenges, in the space. But I think what it has done is that, it has helped them to understand that what digital really means, or how to do things in a more smarter and a better fashion, and also at greater speed. I think agility and speed that, a fintech will bring, or a cloud offering will bring in, I think that has been an eye opener for a lot of banks. And I think for us also, the key thing is that banks are still going to be banks. They will still take their time for, because a lot of them were not able to use the platform, not because they didn't like it, because their whole still process of onboarding someone, even for a free platform, takes them time, actually. So I think they're also starting to realize, and a lot of these banks are now very keen to take advantage of the SBA 7A programs, and they're coming back to us and saying that, okay, this is good. Can we leverage you for that, or can we leverage you for our other products? So with some banks, we are talking to launch some merchant financing products now once the crisis ends, because there's going to be tremendous need for working capital, especially among the retail businesses, because they have been hit the hardest, in this whole.
Right. So do you think then down the road, like the SBA 7A program, which is probably the most popular program there, is that going to become much more digitized? I mean, I imagine it, given that these banks, every 7A lender pretty much has been a PPP lender.
Yes.
So, they've had to move much quicker than they have in the past. Do you think then when they go back to when 7A lending really kicks in again, do you think they're going to take some of those learnings from the PPP and really make a much more streamlined process?
I think that's a good question, because what the government is doing, and they do it after every recession, is that they try to make 7A program a lot more attractive for both the borrowers as well as for the lenders for a certain period of time. Mm-hmm. It's not an infinite period of time. So it's like on an average 6 months to a year. And the Trump administration has done it till the end of this year. So my view on that is that, yes, some of the banks will actually take advantage of it. Some of the banks will want to go digital. I think part of the challenge also is SBA. SBA itself is so antiquated as an agency, that for them to go, part of it is that, do they really want to go digital, But I think quite a few banks really want to digitize their workflows and want to digitize their onboarding processes and ongoing, because you also need to do a lot of monitoring for these SBA loans. So in my view, quite a few banks will do it. Some banks will just go back to their old ways, actually, and do what they're doing. But I think the guys who are going to survive and thrive will have to do something. They cannot hope that, the world will just revert back to the mean. That's not going to happen. Especially because the customers are not going to want to meet a relationship manager. They don't want to come to a branch anymore. So I think the customers have got more demanding than even the banks today, for the
Right. And I agree. That's certainly going to be driving, I think, the bank's behavior. It'll be driven by their customers, and they'll say, no, we want a digital solution here. We want it to be quicker and easier, so we don't have to go into a branch.
And I think the biggest change can happen if, like the PPP program, where the Treasury allowed fintechs to come directly. If SBA and Treasury allows some of these fintech players to also become direct SBA 7A lenders, then there will be a huge paradigm shift in the market. Because then a lot of these traditional lenders will be massively forced to actually do something very quickly.
Right, that is very true, because I know, like Funding Circle, for example, I know they've been trying to be an SBA lender for a couple of years now, and hopefully that will be one of the outcomes here, where
that's what I'm hoping also. Yeah, exactly. Yeah. Yes, because that will be the biggest change in the market. Because my fear otherwise is that banks are talking about going digital, but I know their habits are very hard to change, and they can actually keep going back to the same thing, or do some half digitization or something. Some banks will do it, but a lot of them might not just pay much attention to it once this crisis ends.
Right. Well, I certainly hope that most of the fintechs end up being approved here. So we're almost out of time. Just a couple more questions. So I'd love to get a sense. It's been several years since we've had on the show. So tell us, particularly before the crisis, maybe, because I know the last 3 months have not been very typical, or the last 2 months especially. So what scale are you guys at today? How big is Biz2Credit when it comes to like originations these days? Yeah,
so in terms of origination, we were tracking this year prior to the crisis of doing between $600 to $700 million in origination. We have been, I would say, more of a patient player than trying to do billions of dollars and then what the consequences are. My take on that is that once the markets come back, we should be able to, if not this year, but by early next year, able to hit those numbers or even exceed those numbers, because the demand is going to come back very strong, whenever it comes back, and the competition has actually, reduced. So from that side, 600 to 700 million, we have also invested a lot of money in our technology and data science. So we are up now to 350 people as a company. We have grown very profitably over the years. And we have a lot of good liquidity right now. We are like last year we raised a Series B of $52 million. So all the money is still in the bank and more. So the idea has been now is that we are investing very heavily on the technology and data science side. We just hired few people because the good news now is that there's a lot of very high quality talent really available, out.
Right. Mm-hmm.
And so we are doing that, and we have also become more comfortable in hiring remotely, which obviously we were not that comfortable earlier.
I don't think anyone was comfortable really before this crisis. So.
Exactly. So I think that has helped us also as a company to grow. And I foresee that, if we keep growing in a disciplined manner, then Biz2Credit, I think we were among one of the bigger players, but not among the biggest, earlier.
Right.
I think in next year to two, we could be one of the largest players and a very large player on the Biz2X side also, because I strongly feel there's a convergence happening between the technology, data science, and the credit markets, and the whole behavior, both of the customers and the lenders will see a paradigm shift. I think we are moving towards, finally, it can happen in US by default, is the open banking and this whole other stuff will start coming in because of this crisis.
Right. Okay, then. So it sounds like you're looking to sort of expand market share. Are you going to look at potentially any M&A with with some of your distressed competitors? Is that something that's on your radar?
We are actually getting a lot of inbound queries right now, as we speak, from some of the distressed players. So yeah, we are looking at some of them very closely. Obviously, it's a little bit tricky because if portfolios are not performing well, then you have to be very careful.
Right.
But at the same point in time, yes, we are seeing a lot of inbound queries and we are looking at few of them because I strongly feel that we were very patient earlier and we were growing in a very disciplined manner, and now it's our time to start growing still in a very disciplined manner, but at a much faster pace now.
Right. Okay. Well, we'll have to leave it there, Rohit. Good luck. I very much appreciate you coming on the show today.
Yeah. And thank you for your time.
Okay.
See you.
Now, digital initiatives are front and center of every bank. And I'm actually even a bit more bullish than Rohit there. I actually think we're not really going to go back at all to end-to-end, particularly when it comes to small business. I think we've seen here that most small businesses want digital tools. They want to be able to do this without going into their branch. And I think they have now gotten used to doing it. I mean, the PPP was, a real crash course for many banks who didn't have front-end tools. And a lot of the service providers have stepped up, and obviously Biz2Credit being one of them, stepped up to help the banks really process PPP loans. And I think once customers sort of get used to this digital service, I just don't see it going back. And I think you're going to see, particularly in small business lending, I think it's going to pretty much go to an all digital solution. Once we have small business lending back up and running, I think you're going to see these 7A loans from the SBA. Obviously, you have all the non-bank lenders who are already, most of them are end-to-end digital. So we're going to see a very much different environment. And I think that will be a good thing for small businesses and for small business lending. Anyway, on that note, I will sign off. I very much appreciate you listening. I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lendit Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com.